central bankers all around the world are dumping the currency that you print, right? Federal Reserve notes, right? They're Federal Reserve notes. They're notes of the Federal Reserve. That's what the dollars are. And all these other central bankers are dumping the notes of the Federal Reserve to buy gold. Gold is the canary in the monetary coal mine, right? The canary obviously is dropping dead, right? Gold is shooting up. It is a warning, but it's falling on the deaf ears of a FOMC that doesn't even know what they're hearing, or they can't hear it at all. They're oblivious. They're tone deaf because they don't even understand inflation or monetary policy.
We present the clips of Peter's latest video. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Join our WhatsApp channel for real-time updates, breaking news, and expert predictions on gold, silver, and financial markets. Link in the description or pinned comment. Stay ahead of the curve. Don't miss out.
Nobody said to Powell, hey, what do you think about $3,000 gold? Because on Monday, gold closed above 3,000 for the first time ever. It closed above 3,000 again on Tuesday. And again, today, it hit another record high. It closed at 3,048. And it's up again the evening, another $5. So as I'm recording this podcast live on Wednesday evening here in New York, or I'm not in New York, but New York time, gold is trading in the spot market at $3,053.30, up $5. Nobody brought this up because gold is flashing a warning that the Fed is too loose. You know, in the Q&A, one of the reporters brought up Alan Greenspan's old definition of price stability, where Greenspan said, well, price stability is where businesses and workers don't even bother to calculate price changes into their plans because prices are going up so slowly that nobody really cares, right? So it's like indifferent in decision making. And he asked Jerome Powell if he would, ascribe to that definition and if he believes that we have price stability. And he did say, yes, I like that definition, but he really didn't answer as to whether or not he thought we had price stability, kind of dodged that. But the point I'm making in bringing it up is that Alan Greenspan also talked about the importance of gold in setting monetary policy. Alan Greenspan said that even though we're not officially on a gold standard, he said that he used the gold price as a reference, as a signal to let him know whether monetary policy was too tight or too easy. What Greenspan said was that if gold gets up to $400 an ounce, that means that he's too loose. If it goes below 300, that means he's too tight. So obviously at the time that Greenspan made the statement, gold was probably around $350 an ounce. And he kind of looked at, if it was going above 400, I'm too loose. Maybe we got to tighten policy. But if the price of gold drops below 300, maybe we're too tight, right? We got to ease up. Well, of course, gold's 3,000 now, right? So that shows you how much things have changed. I looked again at the chart going back to the beginning of this century. The S&P is actually down 60% if you price it in gold. I mean, that is an enormous bear market. And it really shows you that the entirety of the gain in the stock market is due to inflation. It's due to the destruction of the value of money, not a real increase in the value of the companies that are represented by the S&P 500, but that we are, measuring their value in rapidly depreciating currency. And it's not just the dollar relative to the euro or the yen or the pound, because all those currencies have gone down. And so it's a global inflation. It's not just an inflation in the United States. But Greenspan acknowledged that gold was an important market signal. And he even said, we're not officially on a gold standard, but it's kind of like we are because I'm using gold, right? So if gold goes up, I'm going to tighten, right? And so it's kind of like a gold standard, but it's not a gold standard. Well, what about now? What is $3,000 gold saying about Fed monetary policy? Well, apparently nobody cares. Nobody even wants to ask these questions. Not one reporter in that room. There was a reporter who asked Powell about the stock market and its decline, and if the decline in the stock market concerned him at all. But nobody asked him about the rise in the gold market and if that was concerning. You'd think you would ask the chairman of the Federal Reserve, hey, the price of gold keeps going up, and now it's at an all-time record high. It just blew through 3,000. Are you worried about that, Chair Powell? Are you worried that the gold market is saying something that maybe you've got your policy wrong? The fact that central bankers all around the world are dumping the currency that you print, right? Federal Reserve notes, right? They're Federal Reserve notes. They're notes of the Federal Reserve. That's what the dollars are. And all these other central bankers are dumping the notes of the Federal Reserve to buy gold. They are foregoing 4%, 4.5% interest on U.S. treasuries in order to put gold in a vault and earn no interest. Are you concerned about that, right? Are you concerned that the markets are repudiating your policies, that the markets are telling you that interest rates are too low and that inflation is going to be too high? Nobody is even asking Powell, his opinion on that. I mean, I would love to hear his answer, although I'm sure, he'd find a way of weaseling out of it like he does for any question that he, either can't answer or is uncomfortable answering. But that is the reality. That is the real proof that the Fed is wrong, because you have a market that is saying that the Fed is too loose and that these rate cuts are a mistake whenever they come. The Fed should be hiking interest rates, not deciding when to cut them. And again, gold is the canary in the monetary coal mine, right? The canary obviously is dropping dead, right? Gold is shooting up. It is a warning, but it's falling on the deaf ears of a FOMC that doesn't even know what they're hearing, or they can't hear it at all. They're oblivious. They're tone deaf because they don't even understand inflation or monetary policy. Looks at when he gets all these questions about inflation, he always responds that, he wants to look at the prices and determine, why the prices are rising. Is it going to be transitory? It's hard to believe they're even using the word transitory again, but, is it going to stick? Or, he's all focused on prices, but prices going up are a result of inflation. You can't just focus on prices. It's like driving in the rear view, looking in the rear view mirror. You're going to get into an accident. It's the money supply expanding, which is continuing, and credit, right? Inflation is not just the expansion of the money supply. It's an expansion of credit, because credit can be used as money. You can buy stuff with credit even if you don't have any money, right? And so the more credit there is in the economy, the more upward pressure there is on prices. So you have to look at the money supply and the credit supply to know what's going to happen to prices in the future. If you're just looking at prices and you're ignoring all that, you're not going to fight inflation. And in fact, if you're saying, I'm going to wait until I see a sustained increase in prices before I do something about inflation, well, then you're too late. You have to be preemptive. You have to understand how the monetary aggregates are ultimately going to impact prices. There is a lag. That's why they say, don't let the inflation genie out of the bottle. By definition, if you do what Powell says he wants to do, wait until you see that prices are really going up, right? Looking through the impact of tariffs, because a lot of the discussion was, well, the tariffs, and, how do you know if the price increases are a one-off event by the tariffs or if it's something more? And, a lot of times, too, when Powell talked about that inflation was a bit higher, he always attributed it to the tariffs or the fear of the tariffs, when prices were going up even before we had the tariffs. But, of course, he's trying to, pre-blame any inflation on the tariffs. I mean, I know this is going to happen, right? Anything that happens, he's going to say, well, I guess it was the tariffs, right? That's how the Fed is going to deflect the blame from its own monetary policies and put them onto the tariffs. That's another reason why Trump shouldn't have done it, because it gives the Fed an excuse and it lets them off the hook, because it's very easy to blame the inflation on tariffs. But if Powell does what he says, just really waits until he can figure out whether the price increases are transitory or whether it's more permanent, by the time he figures that out, it's much too late to do anything about it, right? Because, the prices are really going. So his whole methodology of waiting for inflation to become a bigger problem before he tries to solve it means that, he can't solve it because of the lags. And of course, it doesn't even matter anyway. Inflation is already going to be much higher based on the mistakes that have already been made. The credit supply has been consistently growing throughout the entirety of the rate hike. And then, of course, the Fed stopped hiking. Money supply is growing. Now they are shrinking the balance sheet less, which is also going to end up being inflationary. And now the dollar is weakening. And one of the main reasons that the CPI retraced was the strength of the dollar. It was the dollar moving up that brought commodity prices down. Well, commodity prices are now rising, and they're going to rise even faster now that the dollar is falling. So the temporary effects of lower inflation are going to be gone. That's what was transitory. It was the dip in inflation that was transitory. That was a transitory decline in inflation. And now inflation is going to resume its acceleration, and it's going to be particularly fast because the Fed is not doing anything to put on the brakes. And in fact, the Fed is still planning on cutting rates. And again, that was also why I thought, and even the markets would probably agree, that this was dovish, in that Powell had to acknowledge that inflation was going to be higher. In fact, they increased their forecast for inflation this year from 2.5 to 2.8.